All right, welcome everybody to another OkieTradez study session. So, looks like I was right in the sense that yesterday I was expecting today to be pretty hot, and it was. I mean, we had some crazy runners, some you couldn't catch. I mean, but that's just life in trading. Some were like didn't even set up a patterns, but there was quite a few that did, and let's get into it. So, first things first, I want to look at LIFW. This is my big winner of the day. And as you can see here, we have a day 3 surge. So, it spikes up, and then this will be day 1 now, and it set this high. Day 2, it pulled, but it spiked all the way back up and told me that, okay, now it closed close enough to day 1's high that today it's probably going to break out. Then I thought to myself, well, if it does break out over this, it could potentially break out over this multi-week breakout. Now, it's probably going to be more of a swing in the end. That's what it looks like it turned out to be. But the day trade was there, and I actually traded it pretty much to perfection. And it took me a long time to get good at trading multi-day breakouts. And, I was there with a few people when I heard them say, like, oh, multi-day breakouts suck. They're just too 50-50. Well, what you do is you develop rules on which ones to say no to, and then your odds go up. And that kind of goes with any pattern. You make these little rules because you've lost so many times. You say, I'm not buying this one because last time this happened, etc. And so, what you don't want to do is risk too much size in the beginning before you know what rules to apply to the patterns. So, that's why you go real small, and it usually takes, a couple months at least to kind of get used to it. And then, of course, by then the pattern's going away, unless it's this pattern, which is a multi-day breakout. And that's why I'm really diving into it for y'all, because this multi-day breakout pattern, not only is it a great trade, but it works pretty much in every single market. And I've been trading for about 5 or 6 years, and it's always worked basically if you have great rules, set up to kind of safeguard yourself from taking some dumb multi-day breakouts. So obviously we have a really nice daily chart, and then let's get into the intraday here. So as we can see here, it gaps down, right? So this is the previous day's close. Like, goodness gracious. It closed really strong, and I've noticed this year, and that's something that you wouldn't have picked up on if you haven't been studying, if you haven't been That's one thing I have to credit myself with is this year I made a hard fast rule that I would study every single day, no matter what. If I even had a losing day, just studied the best runners of the day, and even studied my winners of the day every single day. And I noticed that even when stocks either gap up over the breakout, or if they open up red on the day, like in this one when I expected a gap up, they still work. And I would have missed these in previous years, but not anymore. And also it's kind of low volume, but I'm in before everybody else, and then everybody else is buying up way higher around the breakout level. And they're like, oh, why doesn't it work? I bought up here at 130. Well, the way I trade this pattern is if it opens up close enough to the breakout level, I buy first high of day, and then I look to add on any kind of setup I feel comfortable adding with if I can move my stop up. So, you know, that's my specific way I trade it. So first high of day on this setup is what? Right here, right? Because it opens and pulls. So now that is the high of day. So once it got over that, I bought it right here, and I got filled at 110, which was the high of day, and I was risking 103 at the time. Okay, and yeah, it's not acting exactly how I want. I wanted to just shoot straight up, right? Well, they don't always do that, and it was testing me, seeing if I was willing to hold, and I was, obviously. More than that, I was willing to add. Once it held right here, I knew that over high of day I would move my stop up to right here, and I would add because I would expect it to bust green, right? Well, so as it came up through right here, I added at 114, and it got stuffy, and the volume never really poured in. But I held to my wrist, stuck to my plan, and because there is a daily chart, because the odds are in my favor, it just works pretty much most of the time. And as you can see, pulls back and they try to shake me out, but I'm holding to my risk. Mind you, I also have max size. I'm risking, 50% more size than I typically would, and I've added twice. All right. But now it's holding up, going sideways, and it finally busts through green. Strong spike. And I start to sell a little piece here. Can't go higher here, so I sell another piece here. Has a hard crack. Another little hard crack, holds, spikes back up to high of day, can't break, so then I sell another piece, and I'm basically out half. And then it has a really hard crack, and I'm thinking, oh my goodness, it's going to want to try and stop me out. But then I said, nope, we don't talk to ourselves like that, because when you talk to yourself like that, you're not able to see the chart right, and you can't attack it right. So I said to myself, just be calm, be professional. I said, it can easily hold up, set up higher lows from here, and this could be a new risk, if anything. And if that's exactly what happens, right? Well, at this point, I kind of felt that it was setting up a wedge. But as you know, if you've been paying attention to the study session, we need the volume to correlate with the spike before we can draw our wedge, right? Well, we get it right here. The volume spikes, and this is the low float, mind you, so I could draw the line. Now, the reason I did not add right here is because there was, as it was breaking through, a huge 100,000 seller stepped in right here at 126, and I saw it and I thought, well, why would I buy 126 right off the bat if there's a 100,000 seller? If it starts to get broke or starts to break through that, then I'll just buy, because I was going to add 126 anyways. I was planning to get filled 125, maybe 126, so I was okay with waiting. Well, it goes sideways, and I thought, all right, well, if I add through here, I do not want to see it go lower, so I moved up my stop here, and then I added right here. I added back all the shares that I had sold right here. So I was out half my shares, added the half back. And then as we spike up, sell another piece out right here, 133. And then I get another little sell off at 134, pulls hard. And I'm thinking, all right, well, just respect your risk. And then it shoots back up, and I'm like, okay, now it's going to hit 140. But then it just can't go higher, it goes sideways. So I sell another little piece. And then we have a hard crack. And, or no, wait, okay. Yeah, all right. So I was forgetting the trade here. And it has this hard pull right here. And then when it spikes back up too high a day, and mind you, I'm up a lot of money for since I'm trading max size, I didn't want to see a lower low. So as it started to pull right here, sold another little piece. And then as it cracked, sold all of it out right there at 130. And then there was the dump. And I was really happy I was out. But obviously, if I would have just held like I had planned to, it holds up all day. And tomorrow, or not tomorrow, but Monday, I suspect that LIFW either gaps up over 140 breakout level or sets up for it again. Because again, we have the multi-week level right here at 142. So we had that breakout, and then we had the day 3 surge. I was expecting it to all happen in one day, but sometimes that doesn't happen like that. When they don't, I expect typically it happens the next day, so Monday. Keep a lookout on LIFW for a multi-weight breakout on Monday. But now I want to look at some just plain wedges, which we did just trade a wedge right there. So there's obviously one nice wedge already on the day. And notice the volume wedge, and then it breaks the wedge with the volume burst. And if the volume stays strong, you can expect it to keep going higher, but the volume died off, and obviously the stock kind of just went sideways. So, what do we want to see, right? Well, we want to see a stock spike up, right? High, and then obviously it has to be low float. The higher the volume, the better. When it pulls back, now we've got our low, then we want a higher low. So we need to see a spike before we can get a higher low. And we want to see that spike correlate with volume. So this spike correlates with volume. This spike correlates with volume. And then now, after the pullback, we have a higher low. So there's your low, higher low. There's your high, and we buy the higher high. So, but now that we've got our lines or our spikes established with our volume spikes, we can draw our lines. And then we can draw our lines here. And then notice the volume's really strong, so it's good to go. You buy right here, so roughly 385, and then you're risking 340, so roughly 40 cents. But then once you get this big spike up right here, you can move your stop up to right here, and it holds. So now our stop is only 10 cents away. So if we did lose, instead of it being a max loss, it'd only be 1/4 the size. But we get paid and we get the huge spike. And once it comes out of the halt, you either sell it as it's about to halt, or once it comes out of the halt, spikes up and can't go any higher. Or if it comes out of the halt and starts to pull, either way, you sell. Now, again, we have another wedge. Notice that here's our buy zone, and the wedge that's formed is above it. That's a secret key right there. This is also another secret key, the volume wedge. You won't hear that from anybody else other than Dan Irish, which is basically the guy that taught it to me. So give credit where credit's due. But we have a spike correlated with volume and another spike correlated with volume, so we can draw our lines. And obviously, this one would, like, technically is going to take forever, but look at the volume, how strong it is. So again, on these, when the volume are that strong, you can just have your setup. Now, if you notice, there's this one right here, right? Well, so you can have also taken this. So I like to wait for the more clear entries versus these falling wedge. I like the wedges where there's a spike up and then we get the higher low off of it. Well, technically, I guess this is a spike up. So let's just, I don't know, all right. So we've established we've got this one. And then this is pretty clear, so I want to backtrack a little bit and go right here. Yeah, okay. So if we bought it right here, and we get the spike up, right? Then we can move our stop to the point of the triangle. It does hold instead of it being just a little bit lower right here and being a max loss. Okay, holds. Then we get, yeah, right here. That's what I was looking at earlier. Forgive me. We get to draw our lines right here. Okay, that's what I was looking at earlier. So sometimes, you do it by mistake, but all right. So we've got this entry, we've got this one and this one. So that's 1, 2, 3, and then after the fourth one, it's ironic. Wasn't that like the stair steppers? After 4 stair stepper entries, we sell. So I don't know. Maybe that's a new rule here too. After 4 wedges, 4 wedge entries, we sell after the push. I'm gonna keep an eye on that. So today I made quite a bit of money, but then I logged off because I didn't want to give any back. But I think next time what I'll do is if I do that, I'll just keep the size so small, and if it works out, you're gonna make a lot of money. And then on the next wedge, I can use some of the profit from that previous wedge and just kind of keep building and building and building. That's kind of my goal next time. See if I can't push the envelope on building off the winners on the day. That was a really good example. We also have a couple more. This one wasn't like super clean, but like if we notice here, we have the spike up, right? And then we have the volume spike with it. Doesn't always have to be exact science, but then we get this like, so the volume, I'm waiting for a spike and a dip above VWAP. So this is the only moment it happens right here, a spike, and then it dip above VWAP, and then it also correlates with volume. So you can basically just draw your lines here, right? You get your first entry right here, but then you don't get the volume burst, so you're not sure if it's going to work, but you stay strong, and then it holds up, goes sideways, and then it spikes with the volume burst, and that tells you, all right, yeah, this thing's about to be a really good trader. So you get the first push up. See, that's the kind of what I'm working on right now, is like I still want to sell in the second push if you only get one entry. But ideally, the second push is on a big spike. Sometimes the second push is going to be on a small spike. So that's kind of the give or take with that, is what I'm leaning towards right now. I'm not looking at a specific target just yet. Just looking to get out into that second push pretty much, unless there's a clear other entry. Now, you could say that this is a setup, but look how extended it is up here from here, and it really doesn't do anything, obviously. So just take your money somewhere in this area and then be happy with the trade. But it starts to hold VWAP all day. And why am I not taking any of this? Because, well, if you look at this bounce zone, right, it needs to basically set up above that line. Because all these people that bought it right here and all these people that short it right here are bagged. So the shorts are building in right here, and the longs are hoping it can get right back up here so they can sell it for break even instead of just taking their losses on the chin like they should have right here. One of these times it's going to dump down into a halt and they don't get a spike back up. That's, yeah. So we don't hold hope around here. But how do I avoid all this junk other than that too? We look for the volume spikes, right? So what's clear? This volume is clearly lower than this volume. So what's half of this volume? Right here. Does it correlate with the spike? Yes, it does. Spiky, spiky. Spiky on the volume, spiky on the volume right here. So now we can draw a line from here to here. We can draw a line from here to right here. Pretty beautiful, actually. Now, it's the volume is telling you that your entry is going to happen right here. And notice there's a mini wedge right here. So that's how you can take your starter. Boom. And then it confirms. We get the spike up. And we get this other little mini wedge, right? Within the wedge, we get stronger volume, another little volume wedge, and then so you get to add right here, and then another add right there. So there's 3 adds in this. When you get a full day structure, you can get these mini wedges within it right before the wedge is about to break. And then obviously you get the volume burst and you know you're about to get paid, selling to the second push. First push holds, second push could have gone higher, but stuffs, and as it comes back down, you just sell it right there. So that's a great trade as well. Um, this is kind of what I want to talk about on a setup that looks really awesome, because look at all this high volume, really, really strong, right? And you would think, okay, why wouldn't I take this trade right here? Well, there's nothing wrong with that. That's a pretty good trade. But check it, you don't get the volume burst. So I would be nervous. Or maybe I shouldn't look at it as being nervous. I should look at it as, okay, there's a potential ad coming. Okay, so wait, I just want to get this cleaned up. Right? We established we have this one. I want to erase that. And now, but let's draw our lines, because now we have a volume spike with a spiky line right there. So we can draw lines, right? So that's the proper entry, in my opinion. because you get the big volume burst. Because the volume kind of dies off here, but although it is really strong in the sense that it's 500 to 1 million volume 1 minute candles, so that is pretty strong. But it is also 30 cents, so the dollar volume isn't like something super crazy. Which dollar volume is pretty much more important than just actual volume. So if it was doing a million per 1 minute candle on a $5 stock or a $3 stock would be a lot more impressive than a million per 1 minute candle on a 30-cent stock. But all right, so now let's just pretend we were in right here. So first push, holds, second push, can't go higher, starts to pull back, you sell it. It doesn't matter that you didn't get a huge victory, it's the second push. That's just all that matters. Now, you actually would have been a decent one if you took this one and you had the two entries set up on it. So there is that. Overall, a really great Friday, and I'm pretty excited about next week. And again, if you have any questions or anything like that, just hit me up in Small Cap Rockets chat. All right, everybody, have a good weekend. Take it easy.